Hi everyone, thanks for joining. We're back for another episode of LSI CryptoChronicles, and I'm here with Marco Tarshun. Myself, I'm Bogdan Golumbanu, and today we're gonna dive deep into learning how to invest in cryptos, just because they're quite a very popular, let's say, asset class to invest nowadays. A lot of people are trying to find extra returns, but usually they find extra volatility. So yeah, now I'm gonna pass it to Marco, who's gonna introduce you to this topic, and then we're gonna continue with our discussion. So Marco, over to you.
So hi everyone, welcome back. I think this episode today is going to be very interesting because I think it's the most fascinating thing about cryptocurrencies is about investing, trading, and how to store it, etc. So just kind of an introduction, so we can go straight into it. Investing in cryptocurrencies is something that's very different from what you can get from the institutionals or like the common stock markets, especially for for both institutional, retail investors and traders. Most of the time, what interests people with cryptos is the very high reward aspect of it. But what they actually like to understand is that there's also a very high, high risk, but also high reward. And that goes from the volatility of the market because of it being traded on 24/7. So, you go back to sleep, you wake up, it's a different price, and you're like, fuck. It gets to a point like there's just a big change of it. And so because of that high risk, high reward, you can either gain a lot of money or on the other side lose a lot of money. And what has happened recently is that, and that's obviously a topic that I will go further a bit later, is the issues with leverage. A lot of people on the institutional financial markets like to use leverage. On crypto, you have more of a flexibility with it. I know that some people can do 2x, 10x, 20x, up to 100x leverage. And when you get to 100x leverage, you gotta make some money because if you don't, you're in a bit screwed. For crypto investors, they also like to invest in digital assets because of a hedge of their net worth against the fall of the dollar or their own domestic currencies. This is because obviously before COVID, but also with COVID, because of central bank printing through QE, and also the different types of stimulus packages that have affected the financial markets with Robinhood and all those different type of GME stocks, for example, that kind of creates kind of a high behind it, and it has obviously impacted cryptocurrencies. We have to accept that. Cryptocurrencies also bring the social aspect behind the philosophy of free and hard money for the whole world, and not just for the institutional investors that actually grabs a lot because of the money that they have and impact the markets through certain manipulations. Even though we also obviously can also get manipulations, it's, I would say, more of an asset for the people because it started a lot by the people and then more and more getting from institutional investors. And then last, and that's more someone like me, is the technological aspect of it. And also next to the philosophical aspect of it, I was very interested about cryptocurrencies because of technology of blockchain, and also my further reading of Austrian economics and what is sound money. And with the differences of gold and silver, now the young generation wants to get into what we call digital money and then cryptocurrencies. So that was one of the big reasons that made me fascinated by it. And then lastly, with investing in cryptocurrencies, there are a lot of very bad reasons to invest in cryptocurrencies. And a lot of people, especially nowadays, fall into the kind of crypto bubble. This is captured by the classic FOMO, if you're missing out. People are seeing that it's increasing, They want to actually enter the market. And they are always at a time buying massively at the peak of the bubble, and then just to be able to make some quick money. And that is sometimes without the actual understanding of the cryptocurrency. That's a bad reason. Don't do it because you are most likely gonna lose a lot of money.
No, 100%, and I can relate to that definitely. Like especially whenever Dogecoin was at all-time high, I thought, well, there's only one upside to the moon. So I guess if you'd have bought there, you just like incur huge losses. But I guess it's the most important question that everyone is asking today is, how can you invest in cryptos?
Oh, well, investing in cryptos is something that's is very easy to do. But firstly, you need to and right now, yeah, you need to actually start small. So like the stock market, but even more, the crypto market is very volatile. With the unpredictability of the rise and fall, and can actually make someone lose or gain a lot of money. But for you, and I know that is very that makes sense and is very common sense kind of logic, is that you need to have enough liquidity before you actually invest. I think that's like common sense. And please, please, please don't have any type of debt from previous investments, etc., or very aggressive debt, because it's just not very good to actually have a good mindset and have a long-term strategy. Obviously, we'll talk a little on about trading, but for me, it's a very long-term strategy. If you have a long-term investment strategy, you don't want to have a lot of debt on the side, because then it's just going to compromise the whole of it. Once you're clear about your kind of investment strategy, I would say first, even though I didn't do it, it will be very good for you to first invest in stocks, kind of understand how investment works, why it is to buy a stock, etc., kind of understanding the whole financial markets before going to the crypto markets. I didn't do that, but at that time, I actually think I should have done that, just because a lot of the mistakes I actually made when I first invested in cryptocurrencies was me not understanding the financial markets, the different terms, the different things, and getting really into the hype that at that time when I bought it, Bitcoin was at 3K. And because it was 3K, I was like, oh, it's really hype. It was in March 2020. It was doing the huge crash, and obviously I go into the hype of it. So don't do that. And after doing this, if you have an investment portfolio, look at investing maybe 5 to 10% of your investment portfolio into your cryptocurrencies when you start. After, you can actually increase a little bit more by understanding more the markets and knowing how the different trends work. The thing that is interesting is that cryptocurrencies are an investment that is not like a normal stock. The thing that I would compare it is probably, I would say, all the GME stocks or the growth stocks, is because they actually don't provide any types of dividends. And so the only way for you to actually make money out of it is through capital gain. Basically, you buy low, the classic. And so just like as to say, gold and silver, they actually don't pay an interest dividend. And so this is why it's all about benefiting from an increase of the price, or buying from a decrease of the price. And because cryptocurrencies weren't designed to be an actual investment, that actually creates sometimes a bit of a confusing aspect out of it. Because if you watch the first episode, and if you haven't, you should, which actually talked about cryptocurrencies, blockchain, and technology behind it, and the history of it. Cryptocurrencies are actually a medium of exchange. And so they're seen as an alternative to sovereign currencies such as the dollar, the yen, and the euros. And so they're seen as an alternative, as a mean of payment for different types of commerce, especially on the web. Obviously, right now, because it's only 12 years, it does not actually have the legitimacy yet to actually become a mean of exchange. So right now, it's mostly traded between individuals, then between individuals and the different businesses. So with time, for all the other cryptocurrencies, it will have some sort of impact. But at the moment, it's basically almost purely speculative or for investment purposes.
Oh, for sure. That's quite insightful. And given that there are tons of coins out there, how do you go about finding your cryptocurrency that you want to invest in? I guess a lot of people are passionate, or they're very attracted to Bitcoin just because it's the most popular one, or Dogecoin just because it's, again, popular with everyone. But I guess if you are investing in Dogecoin or Bitcoin at this time, or whenever they were at the all-time high, you're already behind the curve. So how do you go about selecting your cryptocurrency then?
Well, as logical as it sounds, the first thing you need to do is select your cryptocurrency, or a list of cryptocurrencies. So obviously, there's I don't know, 1,000 plus different types of cryptocurrencies. If you look at CoinGecko, there's more than 5,000. So it's absolutely massive. For me though, what I would say is that if you're starting, obviously, pick five, because it's going to get complicated. You're going to buy later on because you'll understand more the markets, as you'll start buying more, but only buy 5. And these 5 need to be, I would say, in the top 10 to top 15 of the actual by market cap. I will even add in the top 20, because in the top 15, some of them are stable coins, and or remittance coins like XRP. So unless you wanna buy them for other purposes, I don't really see I don't really see them as actual like cryptocurrencies. More like like stabilized stuff, or more like remittance coins, as I said. So you need to just look at them in general. Make a list, obviously, of the actual cryptocurrencies that are in top 15, top 20. Do your own research. These days, I don't know, if you're actually looking at it these days, the coins are very, very interesting right now. Obviously, Bitcoin, Ethereum, Binance Coin, Cardano, Dogecoin, Polkadot, Uniswap, Internet Computer. There's a lot of them. So actually look at the actual list, do your own research first, have a look at what they are. Because if you actually don't know what they are, it's going to be a bit difficult. You need to get into the nitty gritty out of it. Very simply the due diligence aspect of it. I would say that, as I say, previously was the 5 to 10%, investing maybe $100 if you're in the US, £100, 100 euros is actually a good bet. And kind of see how many coins you actually want to buy. Personally, for what I've done is that I have most of my investment in Bitcoin, but that's obviously, because of the opportunities that I was able to get, and also my understanding of the cryptocurrency world, which I will expand a little bit later on, the rankings and the strategies that you can actually adopt. Because the reason why I also talk about the 5 ones, because there are always going to be a lot of coins that are going to be newly initiated. And because of this, there's going to be a lot of hype. There's going to be a lot of people that are going to talk about it, and you're going to be drawn. And for me, if you're just starting, and the biggest example is Dogecoin, obviously, if you're just starting and you invest in Dogecoin, it might not be the best actually opportunity. And so I feel that you need to really understand, which coins are going to be the first, which coins are going to move the market, and which coin is going to be the higher impact, and most likely going to stay in the top 10, top 15 charts. If you ask me, like when I bought Bitcoin for the first time, if Dogecoin, a meme coin, was going to be in the top 10, I would have laughed at you. Fortunately, or fortunately, depending on your vision, it is. So you need to be very, you need to have a very open-minded kind of a vision, but you need to understand that some of them are going to be ranked, going to be structured, they're going to be have a hierarchy. And so for most likely, if invest, go into the hierarchy once, and then later on, when you'll get more to it, you'll get into the more nitty-gritty of it and be able to understand what it is. Obviously, as I said, Bitcoin #1, the dominant aspect of it, just because it was #1, just because it's in most people's portfolio. Bitcoin also only has a 21 billion actual, 21 million. Oh my God, 21 million is market cap. So obviously, it's very stable, and it's always going to have a high price. The other one is probably Ethereum. Ethereum, because of the tech behind it, because of most platforms, new cryptocurrency platforms or exchanges are actually made on the Ether blockchain. So we'll always be #2. For the other one, well, maybe not always, but we'll have be #2 for a long time. But always assume that there's going to be a lot of volatility behind it. But yeah, just have a look at the different lists that you actually have. I know that in the actual PowerPoint right now, there are some different coins you can look at. So if you have no idea, do your own research. I'll go in a bit in depth later on, but I feel that because I'm not a financial advisor, I can't go too much in depth in the reason of them. So yeah.
No, for sure. I really like your point about investing $100 or 100 quid as your first investment, just because if it goes to bust, it's nothing you can cry about. But if it goes to the moon, maybe you can capitalize on that gain. But
exactly.
For example, coming from a stocks background, just because I usually analyze stocks and I know where they actually trade, I was wondering where can you buy these cryptocurrencies? How do you access those exchanges and stuff like that?
So the interesting thing is that obviously, I know that recently people have been talking about buying Bitcoin and PayPal or Robinhood also, but as a very old school, I would say, even though I haven't been for that long, only around a year and a half investing in crypto, I would say the best bet is exchanges. Really, it's just exchanges. There's a list, obviously, if you can see. The big ones: Binance, Coinfinex, Coinbase, Huobi, OKX. There's a lot of them that actually. There's also Crypto.com, for example. So there's a lot of them. If you're a bit confused while listening to this podcast, just pause it and actually do a search of all of these exchanges, and you'll be finding a good exchange. Now, the thing with exchanges is that there's actually two types of exchanges. The first type of exchange is a fiat to crypto, and the other one is crypto to crypto. So what is the fiat to crypto? So the fiat to crypto is basically an exchange where you can buy cryptocurrencies in exchange for fiat. So fiat is basically another term for sovereign currencies, such as the US dollar, the yen, the euro, the yuan, etc., etc. So one of the good examples is Coinbase, which you can see on the PowerPoint. So Coinbase is a perfect example. You can actually use US dollars to buy any type of cryptocurrencies, such as Bitcoin, Ethereum, Binance Coin, Uniswap, etc., Unicoin, and etc. So you can directly buy it. It's you're going to go through a lot of KYC, which is why. But I'll develop that a bit later. But it's probably the most easiest way. You just link it directly to your bank account, and boom, you can buy any type of currencies that is listed on the exchange. The second one is crypto to crypto, and the crypto to crypto are kind of a new concept, especially with the arrival of decentralized finance, which I know we'll be talking about it later on another episode, something that really I love. But basically, like a crypto exchange is where you exchange certain cryptos, like blockchain, Ethereum, etc., for other cryptocurrencies. So firstly, why will you do that? Well, some of the exchanges, especially DeFi, they actually don't accept fiat currencies. And so because they don't accept fiat currencies, you have to go through into buying another crypto before, as an intermediary, before you can actually buy those cryptos. And so back in days, I don't know about now, but back in days, you used to have Binance, for example. So Binance was a perfect example, where you have where you could buy crypto coins with other crypto. I know these days, sometimes that's what I've done recently, is that when there was the dip for Bitcoin, and there was a rise on, I think, Omisego, I basically used some of the gains from Omisego to basically exchange them into buying Bitcoin. So you can also do that as a crypto to crypto kind of exchange. So that's also a very good strategy if one of the coins that you actually bought is going full moon, and one of the other coins that you think has high potential isn't doing well, where you can actually just kind of make the profit and then just directly use the profit to buy it directly and actually do pretty well. But in general, except on the DeFi aspect, these exchanges are pretty centralized, so it can make them quite vulnerable. But the good thing is also that, for example, I know that crypto.com, no more Binance, but I know crypto.com, for example, actually has a fund. So if your crypto, because it has happened in the past, are hacked, you can actually have your crypto, like that fund has a collateral that actually will pay you back the actual money or the worth of your crypto that was hacked, for example. Most crypto exchanges should have that, but it's very interesting that at least you have that protection. For a lot of DeFi, for example, you don't actually have that, but because it's decentralized, it's even harder to actually hack. If you want, obviously that goes back to blockchain, and if you want to learn more, go back to the first episode. So very simply, if you want to open an account, you just have to open an account of those exchanges, do a bit of KYC, because they're gonna want to know who you are. Back in the days, before I opened, you didn't have KYC, but with more and more regulations coming through, you're gonna have to go through a bit of KYC. It's not as in depth as opening a bank account, but it's still the classic credit card and kind of your like a passport or identity card. Just have to go through that, and then you have to fund your account if it's a fiat to fiat first with $1 or euro to actually have enough money to buy any types of cryptocurrencies. And it will also obviously depend on the different types of jurisdiction. I know personally that there are certain countries that obviously don't have regulations, and also certain countries where cryptos exchanges are actually banned.
Oh yeah.
And so yeah, and I know, for example, I live in Hong Kong, but the territory behind me has banned its cryptocurrencies, and a lot of people, I do know certain people that actually use VPN to buy cryptocurrencies in Hong Kong. So they use VPN, get into Hong Kong and buy crypto and do different types of trading. I personally wouldn't actually recommend that, just because like obviously if you're not getting caught, it's good, but just be careful with that aspect of it, because certain countries will actually be pretty tough on this. But yeah, just be careful, because it can get a bit difficult. But yeah, that's basically like the first introduction for this. And then obviously with picking the right cryptocurrency exchange, you need to look at the rates, and you need to look how reliable the actual exchange is, because they will take the rates for different types of transactions, from either the transaction of you buying cryptocurrencies, or the exchanges of you putting back into the different offline and online wallets that you have, or also switching directly to doing quick profit between different types of cryptocurrencies. So that can actually play a role. That's why Binance, for example, is very, very popular. That was the first exchange I used, because it had very low fees. And so that was obviously a big thing. Some of the exchanges have, they propose different types of services. The leverage obviously is something that can attract a lot of people, especially with when you have 100x leverage, for example. If you're like a kind of a retail trader, that can be interesting. Also very risky. But yeah, I think that those exchanges, we'll talk a bit more, I think, on decentralized exchanges, but for centralized exchanges, they can provide a lot of different services. For the rest, I think it's just kind of a very basic introduction I wanted to give you all. For the rest, there's different charts that you can find on the internet about different prices, etc. And also you can do your own research on this. But yeah, they're obviously easier because they're more aimed for retail investors and like traders. But yeah, there's something that can be very well done. I think half an hour you can set up your account, and then get to approve from your account from your bank, and then you're good to go basically.
Oh, for sure. I guess it's important to also acknowledge the regulations from your home country or the country you're currently in. But talking about, okay, now, so we bought cryptos. First, we identify which cryptos we want to buy. Now we bought them on the exchange that we wanted. How do we actually store them? And how we make sure they do not disappear and no one is actually stealing them from us? Just because this reminds me of the guy that used to pay 10K of Bitcoins for 2 pizzas or something like that. So yeah, how do you keep those coins safe?
It's pretty funny, just to before you transition, it's pretty funny because I actually saw on Instagram recently the actual video of the guy talking about buying like two pizzas with like the 10,000 like Bitcoin. I just like, oh my god, like I just couldn't laugh. It was so sad. It was just so sad. But anyway, let's get back to it. So firstly, you need to set an account. And when I'm talking about setting an account, I'm not just talking about setting an account after having your exchange, setting an account in exchange. You need to choose a wallet. So what is a crypto wallet? So a crypto wallet is basically a software that stores the private and public keys that adds to a link between you and the blockchain where your crypto assets are. You can most of the time get those crypto wallets through the actual creating it online, and they will actually store your cryptocurrencies through the different codes, through an access key, and then also link directly to your crypto wallet address. So that's how you do transactions, for example. Fortunately, you'll need to know the key or like store it somewhere, the address key, sorry, because if you don't, that can actually be very difficult for you to actually send money or also receive money, for example. And so that's how you actually do transactions between any type of companies or so individuals. Obviously, if you invested in cryptocurrencies, the next step is to actually send that into your address. And we have different types of wallets that can actually be stored. You have what we call hot wallets and cold wallets. And then you have, and then obviously there's even more like paper wallets, hardware wallets, but these are different types of hard and cold wallets. And so to do transactions between your wallets, you need to have a private key and a public key. The private key is basically your kind of password, and the public key is basically your address. So that's why you actually do the actual transaction between both. Now you have your digital wallets. You actually go through it, and what you can do is that obviously because you bought your crypto, unless you buy it on your phone, you have a desktop wallet. And so the desktop wallet that you've created, for example, like MetaMask, where you basically you have your address, you have the money transfer from the exchange to the actual wallet. And so when it's transferred, it directly with the address, it takes maybe like 5, 10 minutes, 15 minutes, depending on how much money you actually paid for the gas prices. And therefore, like that will actually let it to go straightforward, and then you have your money, but you don't get the full money of it because of the transaction cost. And so with the online wallet, you have it on desktop. You can also use certain types of what we call software, and the software will be directly linked to your in your laptop, and so you can directly access it through the cloud. These are a bit more safer because they're harder to actually hack than online wallet, which, despite the actual whole space to be quite decentralized, sometimes you can actually get hacked for some reason. Not a lot of people actually get hacked nowadays. I think it's more about people losing the actual the password, so that could actually be a bit annoying. But back in the days, you used to be able to get hacked. If, for example, you're on your phone, you can have a mobile wallet. I actually wouldn't recommend that, just because of, for example, you're losing your phone and stuff like this. It might be easier for outsiders or anonymous people to actually steal your money from your wallet. And also, I feel that these days, with the laptop, especially with all the type of antivirus, etc., it's harder for you to actually get hacked on your laptop than on your phone. On your phone, it's much more easier these days. The hardware wallets, they are very kind of like hardware devices, such as USB key, and they're very, very secure because you have a key for the software that you're using, and the actual key that also has a password. So you have, and then you have another password onto it. So you have 3 passwords, and the 3 passwords are totally different. So that makes it very, very hard to actually hack, but also, if you actually don't write it, you can actually lose your money. So it can be a bit difficult. And yeah, so there are very good examples of it. However, I would say that if you want to store them, the best way is to keep them off exchanges. So when you buy the actual cryptocurrencies, you might want to actually have the temptation to actually just store that on Binance, crypto.com, etc. I actually have some of my cryptos stored, but that's because I have a different type of strategy. Having some cryptos that if something bad happens, I sell them, where other long-term investment where I actually store them on my hardware wallet. But in general, don't store all of them in exchanges, just because despite having their type of fund, it's also not great. And also, like, you want to have the full control of your cryptocurrencies. Yeah.
No, for sure. Well, I guess you can also buy cryptos on eToro, for example, or on Trading One too. But there's no such thing as a wallet that you can do, or at least not that easily accessible. But
yeah.
you mentioned there, Mark, about the hot and cold wallets, and I was wondering if you could expand on that.
So okay, so the differences between hot and cold wallets, and it's something that obviously at first when I was doing my own education, I was like, what, like hot and cold? Like, what was the difference basically? So a hot storage is like the wallet that you can actually carry around in your pocket, and the cold wallet is something that is more akin to your savings bank account. So what I mean by this is that if you want to use your cryptocurrencies, you have it on your hot wallet. So for example, on your phone or on the exchange. Where the cold wallet, on the other time, is something like a hardware wallet or stored more on a more secured manner. So for example, the hotness of it, when I mean the hotness of the wallet, is basically and it's kind of a weird usage, but basically the hotness of the internet, they connected directly into the internet. And so you can actually use it as an exchange wallet, there's desktop clients, the mobile wallets. So you can just, by connecting into the 3G or any type of internet connection, you can start trading or start selling or start buying. So it's very nice. It's very quick, and you can. It's a very more proactive aspect of cryptocurrencies. And so through those wallets, you can also very efficiently and very quickly accept micropayments. So, if you're a big guy that likes to, or not big guy, but if you're an individual that likes to get paid on cryptocurrencies by cryptocurrencies, it's probably the best way for you to actually best wallet to actually have. Or for example, if you're in a country which has rampant inflation, such as we have right now in Turkey, it's also a nice way to actually protect your wealth, and also as a better means of payment than a very inflated lira, which we have right now. And that's also another topic that I kind of want to include. With central bank digital currencies incoming, we will have what we call like the hot wallet coming through with the CBDCs and the money directly going to it. So I know that later on, obviously right now, the hot wallet is mostly for people that are into cryptocurrencies, but with the arrival of central bank digital currencies, everyone will know basically what a hot wallet is, because it's basically like a kind of a different bank account, but directly linked to the government. And so what are the very pros of the hot storage? Obviously, the quick access to funds, the wide number of options and support for different types of devices, so you can be very proactive with it, and the very user-friendly UIs and how simple it is. However, as I said, there's obviously always pros and cons. And the cons is that the exposure to cybercrime with the different kinds of hackers, the ransom, the malicious actors, and the constant threat. That's why, especially if you're using your phones, for example, you might want to have a very good antivirus and also a good understanding of what to do and what not to do with your wallet, and the actual protection behind it. There's also sometimes ways to actually destroy it. So I know that sounds a bit a bit kind of logical, but if you destroy your laptop or something bad happens to your phone, for example, it's going to be a bit annoying for you to actually retrieve your account, your wallet. And if, for example, and I know a lot of people do that, they actually have their password stored in their phone. Like it's just going to take a lot of time, and you might not have the quickness of it. And you could also lose all the restoration details, so that can be a bit annoying about the password, the actual app, and etc. And so the different types of hot wallet you can actually have are online wallets, such as MetaMask. You have the cloud wallet, the mobile wallet, the desktop wallet, and also what you call multi-site wallets. Now we have cold wallets. So cold wallets are what we call offline wallets, and so they're the aspect of the cold. This is more of a form of a secure kind of storage. And for me, it is more like I store my long-term investments on those cold wallets. So it's very a long-term sort of vision. However, there's obviously a lot of risk that you actually get from them. And the funny thing is that you actually get a lot of risk. You get more people losing their money from the cold wallets than the actual hard wallets, which is pretty ironic. And this comes from the reasons that because of it coming from a USB key, and because of the protection from a USB key, and also directly linked most of the time to either your phone or to your laptop, there's a lot of password. And trust me, when you have your first USB key, you'll understand what I mean by very long password and very random password. You can't create your password. The only password you can create is the login key to the link, the link to your USB key, and then the other one we actually enter. But apart from that, the actual big password that you actually have is most likely a 25-word password, and it's very, very random. Oh yeah, it's totally random. So unless you might want to actually take notes of it. And I personally, what I did is that I actually wrote it. I actually wrote it by myself, stored it with my key, or like in the box with my key. So when I open it, I know exactly I can just open it and basically go through it, because you don't want to store it on your laptop or your phone, because with the hackers, with the iCloud, etc., it could be easier for them to actually look at, and it just creates just a bad environment basically. But yeah, so for the pros, it's obviously a greater place to actually hold large amount of coin for a longer period of time, and they provide that kind of safety aspect against hackers and the malicious of the malicious aspect that you actually get from online, which you don't get on the offline. Obviously, the pros, as I said, if the setting aspect can be a bit intimidating for beginners, because of all the actual kind of things that you actually go through. Like it's a long process. Like for me, I think it took me around an hour to actually set up my hardware key. So it took a bit of time. It's not ideal if you want to do quick and daily transactions. It's seriously an effort. I'm not gonna lie. Like I've done it once, I think, and it was just an effort. Like I've never like, yeah, after this I had to lay down a little bit because it was just such a pain. And obviously, because it's an offline wallet, if someone takes your key, I'm sorry to say this, but you're fucked. Like you're screwed basically. So you might want to actually store it either in a safety area, or carry it with you. Or carry it with you like when you're traveling, for example. Like I have it everywhere I travel, just because like I don't want to like leave it somewhere. And also like I want to, every time I travel, for example, because I travel from France to Hong Kong, and then when I'm going to travel from Hong Kong to France, I'll have it with me, or like not with me, but like with me in my luggages, so that if I need to do quick transactions, or investing strategies, etc., like rethink about my investing strategies, I can just directly plug it and go through it. So I think it's one of the big aspects of it. But personally, obviously, it depends. As I said, the differences between cold or hard wallet. One hard is more, hard wallet is more full on, like really quick investing, mostly for traders. And then the other part, the cold storage, is mostly for people that like to invest on the long term. I personally, use both. I have different types of balancing on my portfolio, and I would actually advise everyone to actually have both. The hardware wallets are not expensive, and they actually could save you a lot of money, and also be very well for your long-term aspect, and also get into the tech aspect, because the crypto and blockchain world is very about tech. And so it's good to actually understand the tech behind it. And also it can sometimes be very good to kind of flex, you'd be like, yeah, I have this, I know this, like I know how to use this technology. Like it could be a good starter for a dinner, or just conversation with your friends.
No, sounds good. I remember watching this video with Supercar Blondie, and she had like a watch, I think from Jacob and Co. And that played the role of a key, or like a way where you can store some Bitcoins. And she's bragging, hey, here I have like 20 Bitcoins or something like that. But it's absolutely crazy. So yeah, hardware wallets. You said you have one, right?
Yeah. I actually do have one. Give me a second. I didn't actually. Yeah, I do actually have one, and I'll show you. So I have a Nano X Ledger. I don't know if you can actually see. It's from Ledger, the Ledger company.
It seems like a USB.
Yeah, it's basically like a USB key. Yeah, it's actually a USB key. If you want to have a look, Nano, just have a look a bit. Yeah. And basically, like, this hardware wallet is very, very cool. It's a Nano X, so it's the smallest version and the cheapest version of a Ledger Nano. And so obviously there are other versions of it. I actually just ordered, or it hasn't arrived yet, but the Ledger, I think, the other version, I forgot what it's called. But basically, like, it's like this one has to be connected directly to a USB key to your own account, where the other one is through Bluetooth, which is very, very cool. Yeah. And obviously, I also use this one because I'm half French, and the Ledger company is a French company, and it uses like all the parts actually made in France. So I'm kind of supporting my own country's industry. But if you want, there's also other types of companies. You have Trezor, for example. You have KeepKey. There's also that's obviously another different concept. But I know, for example, that Crypto.com has a credit card where you are very, very cool concept. Basically, like you buy some cryptos. The cryptos are the collateral, and they also offer you like some types of different deals. But most likely, like after doing the deals, it offers us a collateral. And so you can actually use that credit card to pay for Netflix, for example, go to like AMC for watching movies, or also like use it for, or to go to cinema, before COVID, or now with the vaccine. Also just buy it for, go to Starbucks, etc. So it's actually very, very cool. It's not really a hardware wallet, but it can act. I like it but it's more like a direct collateral where you can actually use that as a credit card. But you also have other companies that uses. I think I saw one recently where it was a credit card that holds your cryptos in it. But it was kind of, I don't know. Like I just watched a video about it, but it wasn't that in depth. It's more like an ad. But I thought it was very, very cool. So in the future, I think that like you'll be able to have a hardware wallet through your credit card, which will be so much more simpler than having this. Even though it's just a USB card, it's it can be a bit of a pain to actually use. And as much as I love the company, yeah, it could be a bit of a pain, but it's also long term, right? So I think that later on you'll have more the long term aspect, but also hardware wallet that you can actually directly trade if you really want to trade your cryptos in it. So yeah, that's for the hardware wallet. Very interesting ideas. If you want to get more, there's a lot of different sources. But the Ledger, I would 100% recommend you the Ledger. And start with the Ledger Nano. That's why I've had this for more than a year now, and it's a great piece of a device. And just the introduction part can be a bit of a pain, but just bear with me. It's after a while, it's very easy. Like it's like everything. The more you actually do it, the more natural it actually gets.
Oh, for sure. And just if I could jump in here, Marco.
Yeah.
How expensive are these wallets?
I think I bought this for 199 euros.
Okay.
So obviously it's a price. It's more than the budget, but for this one, for example, it actually stores 5 different cryptocurrencies. Only 5, unfortunately, but that's also the cheapest one. I think the one I bought it stores actually 15. It's a Nano XL. Sorry, it's Nano XL. The other one that is incoming. That one can store 15 to 20 different cryptocurrencies, which I think that is good for me because I don't have more than for the hardware part I only have like maybe 10 cryptocurrencies, so like it's well enough. And I think that one is around like 299, something like this.
And talking about storing cryptocurrencies there, Marco, I know like whenever I was younger and we used to have these USB ports, they would have been like 5 gigabytes or something like that. I was wondering how much of each cryptocurrency can you store? Like 10 bitcoins or 20 bitcoins or?
That is actually a good question. From what I know, I think you can store, I think it has like, I'm actually not too sure. Like, I'm actually not too sure. Not gonna lie, I'm actually not too sure. I think maybe like 20 Bitcoin max. That will be because, yeah. Well, unless you're Wealth, for example, which are crypto investors that actually have a lot. I think it's 20. That's why I was interested into buying the XL because I wanted to also buy some cryptos, not just for me, but also for members in my family. Kind of a family like key. So that's why I was looking at it. Where this one is basically only for me. But yeah, that was a good question. I think it's 20. All I know from what I've seen is that it's only 5 cryptocurrencies tops, and then with the other model it's like 15. But the thing is, I would say that if I actually put all the cryptocurrencies I have from the online exchanges into my hardware wallet, I think that I would be able to store all of them.
That sounds good. And talking about like other wallets worth mentioning, are there anything else apart from the USB type of thing wallets?
So back in the days, nowadays it's not really used that much, but I'm still going to talk about it because it's kind of a history kind of lesson. You used to have what we call paper wallets. So wait, I'll show you. So yeah, hot wallets, cold wallets. And yeah, so you used to have basically what we call paper wallets, which is a very, very bizarre. You're like, what is it? Like a paper wallet. So basically, one of the safest ways back in the days, it's not really used now, but it was basically a paper wallet. What it is that basically you were able to get a piece of paper that was like a Bitcoin, and basically like no jokes, your Bitcoin was in a piece of paper. It had the QR code.
Okay.
Yeah. So unless someone's actually stole it, it was just like basically like is just basically a piece of paper. So it was very, very funny to actually. I've actually seen one like from one of my friends. He actually like showed it to me. I was like, this is so like old school, you know what I mean? Like now you have all the new technologies, and that was mostly used I think until the 2014, 2015. And so you have the QR code where you can actually scan, or because there was also like another type of code underneath it, you can just type it on different types of offline or like online wallets back in the days on different exchanges, and it would send the actual crypto directly into it.
Yeah.
So yeah, very, very cool stuff. I would not really recommend, just because it's a bit difficult. And if you lose it, especially if you lose 1 Bitcoin or 2 Bitcoin these days on your paper wallet, I probably wouldn't have the best day either. So, I wouldn't recommend that. But back in like, 2008, 2009, when the insurance, when they started issuing Bitcoin, that was one of the biggest ways they used to do it. And so they also used to have it like a wallet generator on one of the papers. And I think that it was one of the very old school ways that you were able to do so. I think also Ethereum had that. I think Litecoin and even Dogecoin apparently, when it started out, you were able to actually get your cryptocurrencies and also store your cryptocurrencies through a QR code. But yeah, I as I said, I won't actually recommend that.
No, for sure. It seems like we've come a long way since
yeah, we have
since the paper wallets.
Yeah.
So yeah, now we're switching gears a little bit and talking about trading. Pretty much everything that everyone wants to learn about trading, how to trade these cryptos. And I was wondering, coming from a stocks background, I was wondering, how is it different from the normal financial markets that we're used to, and what should we pay attention to?
So obviously, as I said in the introduction, one of the characteristics of the crypto markets is extreme volatility. Like when I mean, I think using extreme is not even that that not even actually a hyperbole. Like it's very extreme. And so if you're trading, it's actually very like a lot of people that are trading these days are actually making so good margins, because if you're able to actually time the market well and do well with the trading, they can actually play with the game. But also, with the trading part, you either lose a lot or you win a lot. And so that's one of the big differences with the financial markets. For the rest, I would say also one of the big differences is that even with the arrival of Robinhood, etc., you have with the crypto market more of a balance between the retail traders and institutional traders. Even more, I would say nowadays, more for the retail traders than institutional traders, where the financial markets most of the time is like the big hedge funds, the big banks, etc. They have mostly the big monopoly in it, where the retail traders, it can get a bit difficult for them unless they're a next professional trader, or they're very good at it. It's gonna be difficult for them to actually get the good prices. So I think that would be one of the big differences, or the few big differences that you can actually have. But yeah, I think that for trading in it, it's just full of opportunities. It's full of opportunities to be able to liquidate your assets very quick. Where if you want to do a sell off of different assets that you actually have on the financial market, it takes time. It actually really affects the market a lot. And some people can actually see this as manipulation and etc. Just gets a bit of the regulatory aspect that can be a bit annoying. Where for trading on crypto markets, because there's almost no regulations, doing a classic pump and dump is just another day in the office, sort of. I'm not proud of it, but I've done pump and dump before, 2-3 actually, last year. And if you actually can time the market well, and you also do it with some other people, you can do it pretty easily, to be honest. But yeah, talking about crypto trading, there are actually some sort of different strategies that you can actually do in crypto trading. So one of them is the classic swing trading. That's mostly for investors or for people that have a very sort of short-term performance. This is obviously very high risk, high reward, because you're obviously you're kind of betting on the short or long term. And this goes a lot with the actual research you actually do. So it's really research oriented, and it's a lot about reading, doing the market, doing a lot of technical analysis, just the normal type of crypto trading. For that type of trading is actually mostly linked to Bitcoin trading. And Bitcoin trading allows you to, with a high supply and demand, allows you to actually make quite a lot of money on it. You also, and that's not just for crypto, but also for financial market. And that one of the things that actually makes them very similar is that you can do a lot of types of trading options, for example, futures, and obviously do leverage trading. And, with that different type of margin, you can have some types of margin calls. And so that's very good because most exchanges have the Bitcoin. So you can actually kind of create its own market by itself and do a lot of different types of trading strategies on it. I'm not really a trader, but I have some basic introduction to technical analysis and trading, and so that can actually allow it a bit more. Obviously, as you can see on the PowerPoint, that's one of the crypto exchanges, and that's one of the type of platforms that you can actually use to basically trade options, and then also look at the actual trends, look at the charts, look at the actual change in prices, and look at how look at this person's portfolio, look at how you can actually do the trading. So it's basically if you have good understanding of trading on the financial markets, and you understand more about the world of cryptocurrencies, it's basically it's pretty much the same thing basically. So that's one of the things that can actually that brings a lot of financial market investors or traders into trading in those markets. There's obviously other terms that I'm not going to get about, the resistance to breakout, the aspect of it. But I think that's if you're a person that know how to trade, you'll be able to do pretty well. Just know the tech behind it, know the cryptocurrencies, know the actual nature of it, and you'll be able to do okay. Obviously, I'm not going to add too much because it's not really my area of expertise. I'm more of an investor. But I've done pump and dump, and sometimes just looking at volume, you can actually get the opportunities. But the rest of the stuff about this can be linked to investing, which I'll go into a bit more later.
Oh, sounds good. So, I'm pretty sure everyone is familiar with the scams that you can get. For example, on Instagram, right? You get followed by Alex FX, whatever, and they ask you if they can manage the money for you, and they have free pictures, 0 followers, and they're self-entitled crypto investors, crypto advisor, crypto whatever. What are pretty much the main mistakes someone who wants to that gets into crypto does, and of course, how can we protect ourselves from scams like this?
Crypto investing and scamming. That's just it's just a classic. There's no better love story. It's a better love story than Twilight. Basically, you need to understand that because cryptocurrency is a very high risk, high reward sector. A lot of people are actually attracted by the actual gains they actually make. And to understand, one of the basic things you need to understand about investor, mistakes and what to not make is that I've actually had a look, and there are different points that are very important. One of them, you need to look at different endorsements of different crypto products. What I'm saying about this is that, if a lot of people actually, especially new products, they can be endorsed by very, very famous figures in the crypto space. A perfect example is obviously Dogecoin and our Lord Elon Musk. And I'm not calling Dogecoin a scam. I'm just saying that sometimes you need to look at the public figure that's actually that is actually promoting the coin. If it's someone that's very big on the space, I would say that you can kind of trust it. I wouldn't trust fully, but you can kind of trust it. But if a coin isn't really supported by anyone you really know in the space, especially if you're someone that have actually done research, it's definitely going to be a scam. Another thing is about the press. If, for example, there's not a lot of research about the coin, it's not really written by any big crypto related news or agencies or news agencies, I wouldn't really trust it. So that's one of the big things. Market manipulation. I'm not going to show it, but I know that there's lots of different ways by looking at the actual volumes of the new coin that's being issued, to see if it's a cryptocurrency that is actually worth it or not. A lot of scams, how they work is that when at first they're pumped up, like it's basically a pump and dump. It's a classic pump and issue as a pump and dump. The volumes at the beginning are going well, just like a kind of uptrend, and then it just goes super high. It's just basically up to the moon, but it's up to the moon for like maybe like a week or two, and then for some reason it just starts going lower and lower and lower, and then at some point, it's either like you're gonna have a big scandal where the person just liquidates the actual whole money that he gets from coins and basically just leaves, or coin just kind of stabilizes and just keeps at a very low volume and doesn't really gain anything. And that's when you know that's the cryptocurrency, that cryptocurrency can be actually a scam. So it's always about looking at volume and actual news from it. And also just the media, looking at the social media from the company that actually issued that coin. Because if they don't have any types of presence on the media, yeah, you're definitely going through a coin that is not a worthwhile investment. And talking about pump and dumps, which I've talked before, it's all about the hype. It's always all about the hype. We've had in the past coins that had a huge hype behind it because of people also supporting it. What I like to do with coins is that my strategy is always doing a very in-depth research out of it, and also always doing the wait and see approach. So the wait and see approach is I just wait. Yeah, sure, I could bought the coin that's very, very low. But because I know that I want to invest in that coin on long term, I want to see if it's going to be a classic pump and dump. And when it's a classic pump and dump, I just know that I'm not going to invest in it. Or, and obviously I've done that before. I buy the coin when it's done, when it has pumped and then dumped. So a classic example last year was Omisego and Chainlink. These are very serious projects, but last year, because of the crypto pump, they did a classic pump and dump, and I think they reached, I think, at $30, $40, something like this. And I was like, there's no way I'm going to buy this, like per coin. I was like, there's no way I'm going to buy this. I think I bought both coins around like $15, $16. They pumped to up to $40 and they dumped into like $16, and now they're like around like 25, something like this. So I was able to actually do it very well. So it's a classic like long-term vision of knowing it's going to dump, it's going to short, obviously. And so that was one of the right strategies. For other coins that go pump and dump, that's another story. Maybe I'll get into which coins actually pump and dump one day. But yeah, these were coins that I could see that there weren't actually good products, but because I wanted to get into the aspirations of doing a pump and dump. And so that's why I wanted to actually have that experience. Anyway, so going back to those pump and dumps, you always want to prioritize into your low risk investments. That's one of the most important things, is that just like what we call the classic bonds and FX related or products that you can actually buy on the financial markets, you want to buy cryptos that are in the top 5, top 10, top 15 that are in remittance or stable coins. These are coins that you kind of know that they're going to be stabilized, and they're going to be low risk. If you gain too more into the markets, you will at some point want to actually continue more, and that could actually be a good thing later on to actually buy high risk coins and do something quite well with it. The understanding behind it is that for each coin, they need to have a value behind the products, and that's always going through your research. So one of the big things you can actually do is going, for example, on CoinGecko, click on the coin and look through the actual summary of the information behind it. And then when it's done, you after reading the summary, looking at the value, looking at the prices, there's always kind of a link, and you click on the link. Click on the link, look at the project, do your due diligence, look at the actual articles about it, look at Google. It's basically doing sort of the what we call equity research, but it will be like coin research, and you basically look at what it actually does. And some of the coins actually have different types of what we call like solvage, like what they are trying to solve. So for example, like if you're looking at privacy coins, we have something like Monero, Zcash, or Dash. For scalability, and that has been the big theme recently, scalability against the high gas prices of Ethereum. And so two big projects that are actually doing pretty well, or three big projects that are doing pretty well, obviously Cardano, and Polkadot. So these are scalable coins. So if you understand what these coins are doing and what they're trying to solve, you have a better understanding of those actual projects and the coins. And then another one are interoperability coins like Ion. So kind of linking different coins from different structures and blockchains, also part of those coins that you should actually look at. Lastly, just to finish off about the mistakes, you need to look at the actual how good of a quality of those tokens are. And what I mean the quality of the tokens, and that always goes back to the idea of the actual role it has, the purpose, the features, and the actual long-term perspective of the coin. And that's also looking at the actual summary of it and information out of it. The most mistakes that actually people that actually invest in cryptocurrencies do is that because of the hype, because of the name, because of the meme, because of their friends buying it, they don't do enough research. For me, one of the most important things is always do your research, do your due diligence, understand what it does, and understand that like the actual space and how it actually works. And you'll be able to invest in very, very attractive products. Looking, for example, at the token itself, looking at the blockchain behind it, looking at what it solves, looking at how it actually did the ICO, so the initial coin offering. Looking at how the ICO went can now also tell you whether or not it's a scam coin or if it's a real coin. So I think at the end, these are the big things that I think are the most important aspects that you need to see about investor mistakes. At the end, everyone's gonna make mistakes. I've made mistakes. I know Bogdan has probably made mistakes. Everyone will make mistakes, but if you have that behind your mind before you actually do your investing, you will make less mistakes that I did and that Bogdan did.
No, for sure. So you said there about doing pretty much as an equity research report, right?
Yeah.
And of course, we're coming from a stocks background, so we're analyzing the fundamental value of stocks. I was wondering what advice do you have for people that want to fundamentally analyze a coin? And if you could expand on that, of course.
So it's pretty funny because people actually don't believe about the fundamentals of crypto. They only believe in the actual chart, the actual prices, the technical analysis of it because of the emotions of irrational or rational traders. But the thing is that I feel that the fundamentals of crypto, and that also can actually go directly from the investor mistakes, is looking at the role, the purpose, and the usage and the features of the actual cryptocurrency. For me, that is the fundamental. If you actually go more in depth, you can also look at what the actual company does. Most of the time, those companies are obviously private companies, but if for example, Coinbase, who actually just did a IPO, they have a Coinbase coin, and so you could do a very good fundamental analysis of it by firstly looking at its balance sheet, its accounting method, etc. Like what we do in equity research. Do firstly for the own company, so the actual purely the financials of the company, and also do the rest of the usage and the purpose and the role, the features for the coin itself. So that would be for me the perfect fundamentals of the cryptocurrency by doing a research on the coin itself and on the actual creator of the coin. But because most companies aren't on the stock market, it can be a bit difficult. And for me, the fundamentals is looking at the token itself. So obviously looking at the actual ecosystem, looking at the actual how many holders are actually having it, because you can actually look sometimes the exchanges and the volumes, etc. Who is a whale, for example, how many whales are actually holding the different that particular coin. And so that could be very, very important to understand kind of fundamentals behind it. Also the value exchange. So how the tokens create a value behind the ecosystem and the economic system of the actual cryptocurrency and the projects, and how the relationship with the buyers and the sellers. So those research, you can actually find them on the internet. a lot of them through the articles. And so that can actually helps a lot into understanding what that coin actually does, and kind of a relationship between the buyers and the sellers. The other thing I would say is also looking at the functions of that coin. So going back to, obviously, to what I've said, the function of that coin, what it actually does, the long-term perspective. And because like the fundamentals for me has to be done in a coin that has that didn't just come out. It has to be like after 2, 3, 4, 5, 6 months. So looking at social media, for example, looking at the actual articles that company actually writes, not just the media by itself, but also their PR side. So what updates they have actually done. So for example, like one of the coins that I've actually liquidated like 3 months ago was called Ampliforth. They recently just talked after like 6 months of inactivity about doing some sort of scalability behind it and try to bring it back, some sort of interoperability between I think it was about like the Ethereum blockchain with Bitcoin. It was different other projects. That is actually something that's very interesting, and it's the PR aspect of it. But at that time when I liquidated it, they didn't communicate for like 3 months, 4 months. And I was like, what is happening? Like, is there not like nothing on the Twitter, nothing on the Facebook, nothing on the Instagram? And so that was something that actually put me off. I was like, and also that there's also the aspects of the price. And so at the end, I just liquidated it because I thought I had no usage. So that could also be a view of it. Like maybe I was wrong, maybe I was right, I don't know. But the fundamentals is also just looking at the social media aspect of that coin. Looking at the currency, how like if that currency or that crypto is also medium exchange. You can see these days, I think through a lot of articles made, that some cryptocurrencies are actually now used as actual currencies, actual medium exchange to actually buy stuff, which is something very, very cool. And also, the earnings, as I said, the earnings from the parent company that actually initiated all of this. So at the end, it's really about the actual user of it, the actual transaction volume, and the average network value, and the transaction volume over the token velocity. So basically, like seeing the market cap, how much is being spent, how much is being used on a daily basis, on a weekly basis, on a monthly basis. You can find all this information. So for me, the fundamentals in general, just to really recapitulate, is basically like is basically like the non-price related stuff. It's all the rest. And all the rest can actually give you a good understanding of the crypto, of whether it's a good investment or not. And if you mix both together, even better. And so that can actually makes it even better, for the end, for you to actually continue into investing and finding the right coins for you and for, your portfolio and for your long-term strategy.
Oh.
And
yeah, just adding on that, I think it's quite essential to do your fundamental analysis, just because a lot of people are buying from an impulse, right? Just because everyone is buying, the
emotions
price or the price of Dogecoin is rising or of Bitcoin. But it's crazy.
Oh, dude, it's like it gets to the point that like I feel that our space is the crypto space is very irrational. Just like obviously I'm not going to go into the more theory part of it, but it's even more irrational that what the financial markets with the retail traders and the GME stocks and all the meme stocks, it just gets super, super irrational. The memes are very funny, etc. But I just think that like people need to actually do the research sometimes. I guess because the space isn't mature enough right now that you can actually like gain a lot of money and not actually really care about like the fundamentals of it. But with time, with more institutional investors coming through and more people really like loving the actual space, like that will actually like be the way for them to actually have more rational, having actors that are more rational. Even though we're not rational by itself, but we'll have more of a rational market basically. Yeah.
Oh, 100%. And I remember you were mentioning there, like pump and dump schemes, or how are they called, like pumpy dumpy. But I guess if you want to actually trade these cryptocurrencies, you need more depth, more color to that. It's just like going to the stock market and making sure you buy low and sell high. does not mean anything unless you get the underlyings of it. And I was wondering, what advice do you have in terms of investment strategies for these cryptos?
Well, investment strategies, there's actually quite a lot of them, but I have three. I have three that are very easy. And the thing that is very interesting is that these three strategies are actually that actually come originally from the financial markets. So my first strategy is called the post-mortem strategy. So what is a post-mortem strategy? Basically, it's a strategy that's what we do if your investment is liquidated due to a catastrophic event, and how you will improve your diversification, into doing things differently. Basically, what it means is that you've already accepted that all your money is going to be gone. Like whatever the $100, $200, $300 invest in your cryptos, because at the end, all you're going to lose, is the principle of it, unless if you're leveraged, which, as I said, I don't advise to. And so it's basically thinking about, you invest all the money, you already accepted you lost all your money. How will you rebalance your portfolio into making it sure or decreasing the actual risk of you losing all of that money? So all about basically just rebalancing it, and already thinking that you've lost your money. And so because you already have this thought, for me, for example, when I started investing in cryptocurrencies, I didn't have that strategy, but with the long term, because I've accepted that, one day maybe something will happen. It has taught me about what will be the next 3 steps if I lost all my Bitcoin, if I lost all my Ethereum, if I lost all my Litecoin or all my Dogecoin, for example. What would be the best way for me to diversify? And so it's already acceptance of it, being okay with losing all of this money, and also like the next 3 steps. And so for me, one of my best strategies was looking at, for example, DeFi coins. I love those DeFi coins where, that was one of my strategies. Or also buying coins that are scalable. So for the scalability aspect of it against Ethereum. So was like me going step ahead into thinking that like maybe those coins will replace them, maybe not. But always knowing that, if something bad happened, I have other coins or cryptos that I actually have to counter that. Obviously, one of the best other aspect of it, of rebalancing your portfolio, will be to invest in other assets, non-crypto assets in the financial markets. That also would be a good strategy. But if you're really talking about crypto by itself, that would be, for me, one of my first strategies I would use. The second one I will use is the Ulysses strategy. So the Ulysses strategy, which is the name of the Latin name for the book Odyssey by Homer. And basically is a financial, financial planning, method to keep savers and investors from listening to what we call the sirens that could wreck the financial sheet. So basically the Ulysses strategy, back to the book by Homer, was doing his travels. He basically saw a mermaid, very, very attractive mermaid that was singing very, very, very well. And he was attracted to actually, go and meet her. But the big problem is because he was on a ship, and to meet her, he had to go swim. And the problem is that if he actually went swimming, the mermaid going into the water would actually kill him or eat him alive, basically. And so because he knew that, because of knowing that one of the stories predicted that would happen, he actually told his men to actually basically tie him up, and doing the whole process, just not move. And just stay there, until they pass through the actual mermaids. And so, why is that relevant to your finance? You will ask. Well, when you have the news, your advisors, your friends, the charts, the margin calls, if you're leveraged, telling you that you should sell or you should buy, that's when that's when it can actually be very, very bad for your long-term investments. And I would say, I would even add, if you're very present on Twitter, for example. If you have, a good old Elon Musk telling you, putting different memes or tweets that actually wreck the financial, the crypto markets, you could see that the reaction to his tweets are a classic example of people letting go into, reaching the mermaid. because they don't have a long-term investment. They're always going to allow the financial news, the other people telling them what to do, and not having your own idea of what your investment, your short, your short, your long, your midterm, and your long-term investment is. So yeah, we live in a society that uses social media a lot, that can get into news very, very quickly. If you work in finance, you have Bloomberg. It's very quick. It's very quick for you to actually react, to get the emotions out. Losing, for example, like 10%, 20% in your Bitcoin can be very, very scary. But as I always say, the crypto market is so volatile that at the end, losing 30 to 40%, I've witnessed Bitcoin lose 80%. So at this point, like, nothing can hurt me. You know what I mean? It just, nothing can hurt me. And so, as I say, it's always another day in the office. It's just another day in the office. All you need to think is, stay off the emotions, have your long-term plan, know exactly what you're going to do, and it should go well. Just don't care about what other people think. And then thirdly, my last strategy is exit strategy. So you will ask, like, why would I have an exit strategy if I really believe in a long term? Well, what will make you liquidate your whole investment? Now, what events will make you liquidate your whole investment? And so that could be something that could be very important. Another way about the exit strategy could be around just trading, for example. So, a lot of people actually know about the Bollinger Bands. So you have the upper band and the lower band. And so one of the things that could be very nice is looking at, if you have the price of Bitcoin, what will make you take a bit of profit, and what will make you buy the dip, basically. And so with the two Belgian brands, you have the high price and low price, and you're able to actually, kind of get to profit or get a bit of profit when you can, and also buy dip when you must. And so that can be very interesting.
And so at the end, the big aspect behind this is, what is going to make you actually want to exit for the different types of events, and also with the two Bollinger Bands, seeing where you want to take some profit, and when it goes lower, where you want to buy the dip, because buying the dip is a classic thing that you do with crypto markets all the time. So yeah, so these are the three big strategies that that I actually would recommend and I personally use. The good thing is that I actually write them. I've actually written kind of like a journal about my strategy, not full on strategy, but like more by bullet points to actually understand what I would do. Some are very scary. Some, especially with the exit strategies, like what would make me liquidate my phone crypto, especially as such a person that's loving the actual asset and the technology behind it. It will be basically like a world war, or basically like, I don't know, like something very like a financial crisis where I have to liquidate it for my financial behavior, like survival basically. So these are the three big strategies that I would actually recommend. But there are obviously some other types of strategies that are more common. I also kind of use some of them. One of them is the classic buying and holding. So the buying and holding is basically just buying, and then putting on either on your hardware wallet and just, taking a nap, go, take a vacation, just chill and not care about the financial markets. And that is pretty funny because I've actually done that for some of my cryptos. And you just buy and hold, look at the different prices. Sometimes you cry a little because you've lost like 40 to 50%, and then you smile a little when you've gained like 30 to 40%. But yeah, that's just a very, very classic strategy that some people use, and it's the most simplest one, to be honest. You just do nothing, just wait and see. It's just you just do your own thing on the side, let your crypto rise, and then maybe one day after forgetting 2-3 years, you might make like a 300 or 400%, and that just be a very good investment.
Yeah, totally. I can totally relate to that, Marco, because recently I bought into Cardano just before it did, and I was making, like, I just put 100 quid in it, $100, and I was joking with my girlfriend, like, should we buy more? Like, what happens if in 2 years it reaches $3,000 or $30,000? Well, we can retire easily or something like that. But yeah, I'm pretty sure like wishful thinking can be also an obstacle whenever dealing with investments.
Oh, 100%. And this is a very good transition into another strategy that I did talk a little bit with the exit strategy, which is dollar cost averaging, or your own currency, like pounds cost averaging or euro cost averaging, which is using either Bollinger Bands or other type of price signals to when you should take some profit. It doesn't have to be like, I don't know, if you have 2 Bitcoin, for example, if you're lucky to have 2 Bitcoin, and it hits like I don't know, like right now the price is around 38K. Let's say it hits like 50K, you can maybe like sell like 0.2, 0.3, or even 0.5 of your Bitcoin to actually get that cash for your own like daily life stuff. Or even if, for example, like another coin is doing very badly, use that money into buying that coin. So I actually really do advise people to do the good dollar cost averaging. It can be very easily done on Excel. That's why I do. I have an Excel where I have all my different cryptos, and the price I bought in, the actual well, not the price now, but the price I bought in, and also like how many amounts I have. And every single time I actually sell to do dollar cost averaging to buy other cryptos, I do the calculations, and it works perfectly. And you can actually kind of have a good understanding of when you bought, and kind of just a continuation of your kind of you been there, you being into the crypto world. So it's very different from the holding, but you can also hold basically like what I did with my strategy, having I would say like I have 60% of them in my hardware wallet and 40% online.
Oh, sounds good. And just because we're approaching the end of the podcast, are there any final tips you can share with our listeners?
As final tips, it's the thing now with crypto investing is, with more regulations coming, unless you live in a city like unless you live in the Middle East or in Hong Kong or Singapore, or a country that has low taxes or no capital gain tax, you're gonna have, especially in the US and the Western world, you're gonna have to face capital gain taxes. And because of regulations, because of the hype behind cryptocurrencies, behind the bubble, etc., cryptocurrency has actually been now considered an actual asset. I know with the IRS, it's been considered since 2018, 2019, so you have to declare it, just like a class of stock or property. And so if you do sell your crypto and make a profit, you'll have to pay capital gains taxes. And I do know that in the future, well, not in the future, but yeah, probably in the future, and they might have started now. Especially the big like crypto to crypto, fiat to crypto exchanges, the IRS will have to directly actually ask those companies or those exchange companies, for example, in the US, if they want to work there, to declare people that actually bought cryptocurrencies. And so even if you don't declare it, like Big Sam will do his best to actually find out whether you bought cryptocurrency. So yeah, you're gonna have to in the future, like you actually start now, and then when you actually will have to do it, and obviously depending on where you actually live. But yeah, budget the actual taxes, budget how much you're gonna have to pay, and budget also like the actual amount that you'll think you pay. So that will be one of the big themes later on, because of the actual hype behind it. And governments these days, because of COVID, etc., they are finding new ways to actually to gain revenues. And in the US, the stimulus package, infrastructure package, it's cryptos will be the new, I would say, gold mine for them to actually get it. And last thing I would say also about the aspect of short-term investing, most people, as much as Bogdan and I are obviously people that have a long-term view, most people are doing short-term investing. And there's nothing wrong with short-term investing. Like I've done short-term investing with different coins, and there's nothing wrong with that. But you need to understand it's a very volatile asset. You need to understand that you cannot keep doing your short-term investing. That at some time you have to have a long-term vision out of it, and that having a long-term vision will actually make you less stressed, and to be honest, will make you have more money. 100%. Like the amount of coins that I was able to buy at the start of it, after having a kind of wait and see approach, and not touching it, and be able to see the price I have now, like I'm so happy that I actually kept it. I'm so happy that I was able to kept it, because if I didn't, if I sold off when I saw that like it was a pump and dump scheme, or after the hype, etc., like I was gonna make, I thought I was gonna make a lot of money. Well, the price difference is quite huge from when I thought I was gonna sell it and me having it now. So you need to, for me, like the most important thing is having a long-term investing kind of philosophy. And the amount of yield that you will get, the percentage and yield that we get from having that long term is amazing. And yeah, just have a long term vision. As I said, cryptocurrencies are going to lose its value. The volatility is going to be either very high or very low. So you just have to deal with it. It's a very high risk, but also high reward asset. So at the end, if you're in the long haul, you're gonna have a good time. And if you apply the strategies that we've actually talked about, you should be doing pretty well.
That sounds good. But yeah, well, hopefully you enjoyed this podcast, guys. And I know I also saw your T-shirt, Marco.
Yeah, actually, I need to go back. Sorry, I forgot. Basically, like finance tips, so capital gain and short-term investing. Always buy the dip, and yeah, I'm gonna say it. Despite the actual prices right now of all the different type of cryptocurrencies and especially Bitcoin, it's all about the different phases of Bitcoin, and I'm gonna say it's gonna go to the moon soon. I'm telling you.
No, for sure. Sounds good. So yeah, thank you very much everyone for tuning in. And if you have any other questions, feel free to message us. And of course, connect us on LinkedIn. And yeah, we're looking forward to hearing your feedback and to see what you want to hear from the third episode from Crypto Chronicles. But yeah, in the meantime, thank you very much, Marco. I hope you're enjoying your evening in Hong Kong. And yeah, have a good rest of the weekend then.
All right, you too, man. You too. It was a lovely time to it was a lovely time to talk about this topic. I'm obviously someone that's very passionate about it, and it's great that Bogdan has obviously also gotten into this space. It's an amazing space. Like I've just touched like the surface of the surface. Like this podcast might seem with different parts, might seem long, etc. in depth, but this space is huge, and there's so many stuff that we can talk about. And I know that in the future we have even more topics and more in-depth topics to talk about, and things that are very exciting and new projects. And I actually think that we can maybe another episode go more in depth about investing and what we can actually do, because it's just like even just talk about what we actually buy in our portfolios. That could be also a good way, without saying too like financial advisor ish kind of thing, but kind of about the good coins that we actually believe are going to be the future, basically.
So yeah, follow Lifestone Insights for more then. And yeah, thanks guys. See you in the next episode then.
All right, see ya. Bye.